Good morning, everybody. Good morning. I hope you're well. Right, so we need to jump straight into this because Jeremy Hunt is speaking right now around some of the interventions that he is, well, not interventions, but rollbacks on the mini budget. And so let me just set this up and then we will get going and just listening to what he's saying. Then I can provide maybe some thoughts on. What he says and what it's actually going to mean crucially for you. So let's jump over now and have a little listen to what's going on um, at the minute.
Which are all designed to provide confidence and stability. Firstly, we will reverse almost all the tax measures announced in the growth plan 3 weeks ago that have not started parliamentary legislation. So whilst we will continue with the abolition of the health and social care levy and stamp duty changes, we will no longer be proceeding with the cuts to dividend tax rates, the reversal of off-payroll working reforms introduced in 2017 and 2021, the new VAT-free shopping scheme for non-UK visitors, or the freeze on alcohol duty rates. Secondly, the government's current plan is to cut the basic rate of income tax to 19% from April 2023. It is a deeply held conservative value, a value that I share, that people should keep more of the money they earn. But at a time when markets are rightly demanding commitment to sustainable public finances, it is not right to borrow to fund this tax cut. So I've decided that the basic rate of income tax will remain at 20%, and it will do so indefinitely until economic circumstances allow for it to be cut. Taken together with the decision not to cut corporation tax and restoring the top rate of income tax, the measures I've announced today will raise every year around £32 billion. Finally, the biggest single expense in the growth plan was the energy price guarantee. This is a landmark policy supporting millions of people through a difficult winter. And today I want to confirm that the support we are providing between now and April next year will not change. But beyond that, the Prime Minister and I have agreed it would not be responsible to continue exposing public finances to unlimited volatility in international gas prices. So I'm announcing today a Treasury-led review into how we support energy bills beyond April next year. The objective is to design a new approach that will cost the taxpayer significantly less than planned, whilst ensuring enough support for those in need. Any support for businesses will be targeted to those most affected, and the new approach will better incentivise energy efficiency. The most important objective for our country right now is stability. Governments cannot eliminate volatility in markets, but they can play their part, and we will do so, because instability affects the prices of things in shops, the cost of mortgages, and the values of pensions. There will be more difficult decisions, I'm afraid, on both tax and spending, as we deliver our commitment to get debt falling as a share of the economy over the medium term. All departments will need to redouble their efforts to find savings, and some areas of spending will need to be cut. But as I promised at the weekend, our priority in making the difficult decisions that lie ahead will always be the most vulnerable. And I remain extremely confident about the UK's long-term economic prospects as we deliver our mission to go for growth. But growth requires confidence and stability, and the United Kingdom will always pay its way. This government will therefore take whatever tough decisions are necessary to do so. Thank you.
Well,
Okay, let me just get rid of this. Okay, I said on the podcast this morning, if you've not listened, maybe go and listen, that what we're going to see is we're going to see a wholesale change to the mini budget. So there are some pretty significant things that he's mentioned there. Um, and there's going to be a statement to Parliament as well later on this afternoon at 3 o'clock. So look, let's have a look at what he's just mentioned there. Tax cuts are going to be basically, they're going to be gone. So income tax falling from 20% to 19%, that's not going to happen. Corporation tax, we already know we've had a U-turn on. But the biggest thing, and he's saying, interestingly, that the combination of those two things is going to fill the hole by £32 billion. But the biggest thing, and this is probably the bit that is going to fill a lot of people with concern, is the energy support, right? That $150 billion we were supposed to be lending that was announced when Liz literally just got into office, that's essentially gone. So currently what we have right now is we have the £400 energy bill kind of help that was offered to help between October and March. That's still happening because obviously you would have got emails from your providers saying that your bill will be reduced by, I think it's £67 this month and next month, then £66 all the way up until the end of March. So that is still happening. But what this basically does now is it brings the focus in on energy prices and what assistance is what we're going to get. I mean, we were capping the unit price at £2,500 a year for the average household. That cap is no longer going to exist. So the question is, if they're not going to borrow this £150 billion to make that happen, what are they going to do? Now, some of the bosses of maybe Shell, for example, has said we should have another windfall tax. Is that what they're going to do? I mean, they're going to have to do something, really. So this is really, really interesting. And I guess this is just the tip of the iceberg. Later on this afternoon, at about 3 o'clock, when he's speaking to Parliament, it will be interesting to see what other changes actually come along, because the mini budget as it was 3 weeks ago, that's dead. It's completely dead. And he has reiterated here as well that there were going to be difficult decisions when it comes to spending cuts. Therefore, I would imagine, I mean, look, it's a really nasty situation that we find ourselves in right now. Energy prices peaking up, inflation. Andrew Bailey yesterday said that, with the details of the mini budget now coming forward, they might have to take more aggressive stance when it comes to tightening monetary policy to tackle inflation. So possibly looking at an increase in November of 0.75, maybe even 1%. What is that going to do for mortgage rates, so on and so forth? We don't yet know. There was commentary this morning saying that, even with the news that Andrew Bailey kind of put out yesterday, kind of explaining and signposting what was literally going to happen, while some of it might already be priced in, a lot of the mortgage lenders are still waiting to find out what they're going to do so they can adequately price mortgages for what they know or have some assurance of what the interest rate is going to be, as much assurance as they can possibly have. So this right here that's a big announcement. It is a very, very big announcement. The energy price guarantee is a very, very big thing. It didn't just scale back, it's gone. That's a big, big decision to make. And so the key question here is this going to give confidence to the market? Because that's what he's been trying to do this entire weekend. Instill confidence in the markets that they will do what is necessary to balance the books. And this is going to have the bigger impact on gilts, on the pound, on pension funds. I've got a video coming out tomorrow on pension funds, our pension fund safe. Go and watch that when it comes out at 5 p.m. This is all about reestablishing, reinstilling confidence. So is it going to work? I mean, I'm looking at the moment at the pound. The pound is up 1.2% right now off the back of this announcement. Is this going to continue? Hopefully it does. We haven't got the gilt buying program in place right now because that ended on Friday. So this is an early indication of good news. But I'm not a bond trader. I'm not tracking it as a bond trader would. But at the moment, the pound is up versus the dollar. Let's have a look at the FTSE. Actually, let me see if I can actually just share this with you. Bear me 1 second while I get this screen up. Maybe I can just show you what I'm actually looking at. So you can also see, where am I? Window. It's this one right here. Okay, so let's go side by side. So this is investing.com essentially that I'm looking at here. And as you can see, yeah, the pound is up 1.2% right now, which is good news for the currency and a little bit of stability. But is this going to be short lived? I mean, a lot is going to depend on what gets announced and what further detail we get later on at 3 o'clock. I will try and cover some of that as well at 3. But the pound is up right now. Let's have a look at what's going on with the FTSE. Let's look at the indices major. Well, where are we? FTSE 100. Okay, FTSE 100 is also up today as well, 0.62%. So maybe that's a good early indication that maybe there is a little bit of confidence coming in. Can we see the FTSE 250? Because FTSE 250 is more of a better representation of the local market here in the UK. 250 is not on here. I can't see it. But I guess, look, really, really big announcements. Really big announcements. The question is, what is the energy price guarantee going to be replaced with? Because it's a... God. We're going back to a situation where people are going to be squeezed from an energy point of view. The mini budget has messed up interest rates and mortgage rates have increased. People are paying hundreds of pounds more per month for mortgage costs potentially. So you've now got energy prices increasing wildly, interest rates pushing up mortgage prices, rents also as well. It's going to be very, very difficult. But look, those are the announcements as they are right now. I'm going to keep track of this until 3 o'clock. Hopefully, I'll do another live around about 3 o'clock. But thank you so much for joining me for this. Do me a favor. Let me just have a look at this quickly. I explained yesterday. I did a live Q&A yesterday evening. I kind of just explained that, when I do these kind of lives, other people may find benefit in this information that I'm trying to share and the insights that I'm trying to give. And so it is really, really important. One of the things that you can help me with is by smashing the like button. There's about 50 people on here at the moment. We've got likes at about 16. If we can get that to about 30, that will be great. Because after this live basically ends, what YouTube essentially does is it will gauge and say, right, did people think that this live was interesting? Did they engage with it? And if they didn't, basically what they do is they suppress the video and they don't push it out to other people that may benefit. So one of the real things that you can do to help me is smash that like button and try and get me up to probably about 30 likes. That will be absolutely amazing. I'll track this through the rest of the day. I'll probably do a live maybe around about 3 once we've got a little bit more information about what is going to be said to Parliament, and then we can kind of just dissect and see what that basically means for us as, I guess, bystanders, observers of this entire debacle. There's still a lot of chatter about Liz basically just going, and I think maybe she does need to go, but that's a political subject of its own. Anyway, thank you so much, guys. I appreciate you. I will catch you later on this afternoon, possibly at 3 o'clock. Take care.